Hey, welcome to this week's San Diego Market Matters, and it's that time of the month again where we dive into the San Diego market data specifically. So we have the March numbers that have just come in this last week. I'm going to report on exactly how San Diego is doing. And if you watched last week's San Diego Market Matters, I talked about how the national numbers are looking. So I'm going to compare our data here in San Diego to what's happening nationally so you can see how we're in line with what's going on there, and also give you a little bit more context to exactly what San Diego is feeling in the current market conditions that we're experiencing at the moment.
I'm feeling emotional.
Now, if you're new to the channel and you haven't liked and subscribed yet, please consider doing so now. And if you're thinking of buying or selling anywhere here in San Diego, my contact info is in the description below. Feel free to reach out to me and we could talk about how we can make your next move happen for you. Now let's dive into this data. Okay, so here is the March 2025, just the monthly snapshot. So we see a negative 0.84% in closed sales of property. So the number of homes that are selling is down 0.8% year over year. So this time last year, we're down a little over 8% from what we did last March. Our median sales price for all of San Diego County, so this is going to be attached and detached together, is 3.2% positive. So we're up 3.2% on that median sales price over the entire county. And our inventory, our standing inventory, is up 42.6%. Now let's dive into the detached versus the attached sides of the market. All right, let's start off with new listing data. In San Diego County, across the entire county, last month of March, we had 1,929 new listings in the detached sector, okay? So those are all freestanding homes that do not share walls. In the attached sector, so that's twin homes, townhomes, condos, sometimes people say apartments, there's 1,285 new listings in the month of March. Now on the detached side, that's an increase of 5.5%, while on the attached side, that's an increase of 25.6%. That sounds like a lot, but be mindful the inventory of new listings coming to market last year was really, really low. Last year, we saw 1,023 new listings. So we're up a little more than 200 in the attached sector from last year to this year. Here's some interesting data to look at. On the detached sector, January, we were up 20.8% of new listings. February, we're up 14.9% of new listings. March, up 5.5%. So there's been this gradual decline of the number of new listings coming to market in the detached section. You could pretty much say this has kind of been happening since December. Since December and January were pretty flat. They were both up just barely over 20%. So this would be really, really interesting to see if in April, this is consistent. If we see another single digit number in the new listing growth for the month of April, that will be really, really interesting to see if that pops up. On the attached side, it's actually pretty consistent. So we saw 25.1% of new listing growth on attached homes in January, 20.8% in February, and 25.6% in March. So that seems pretty consistent. We're getting more attached homes coming into the market. All right, now moving into pending sales. Pending sales is a really, really good metric to look at. And I feel like a lot of people don't consider pending sales when they're doing comparative market analysis, when they're thinking about selling their home. So usually when people are selling their home, they look at sold listings, when we also should be putting just as much emphasis on listings, like what's actually on the market that we would be competing with when our home comes to market, as well as what's in pending. Pending tells us where the money is going. What are people moving on and how much is actually moving? Our detached sales in the month of March came in at 1,396. On the attached sector, it's 776. Now here's a really interesting data point. The number of pending sales has been happening in the month of March for the last 3 years has been kind of consistent. It's within a reasonable range. So if you look at detached sales for the last 3 years, we've been selling in the 1,300 range, despite the amount of inventory we've had. Same thing is kind of consistent with the attached sales. We've been in that 700, mid 700s to upper 700 range. Now for year over year, our pending sales are up, but not by very much. So on the detached sector, we have 1.5% up in pending sales. And on the attached side, it's 2.6. positive signs, right? So with the inventory, we're getting more pending sales. And in most other markets, we would want to see the number of pending sales going up with inventory, kind of within reason of each other. And that's not happening in San Diego, but this comes as kind of a good news, which I'm gonna get into in a second. Now, for the closed sales, these are ones that are closing escrow. There is a clear trend present. We have been on a decline for the last 4 months, month to month, and the last 3 years, year over year for the month of March. So this last month, we're down 7%. We closed out 1,158 detached homes, and we're down 10.8% in the attached sector, closing out 658 homes. But if you look at the year over year change back to December, look at the detached section here. We had 27.6% up. Then in January, we were down to 7.1%. February, we were down negative 4.9%. And then March, negative 7%. So the number of sales is starting to fall off. Like we're seeing this very, very clear trend over the last 4 months. We're also noticing something very similar in the attached sector. Back in December, we had 28.4% positive growth in closed sales year over year. But then in January, we were down 1.1% negative. Then in February, we were down 12.7% negative. And then in March, negative 10.8%. It's not as much as February, but still negative numbers within reason. So there's another trend on that side. We're seeing less homes closing. Okay, before we jump into average sales, let's just recap what's going on exactly. Okay, so our new listing inventory is up. Okay, so the number of homes that are coming to the market, that is increasing month over month, and we've been seeing this positive positive trend and inventory growing, which is a huge sigh of relief for buyers. Our pending sales are up, but not even close to the number of new listings. All the while, our number of sales is actually going down. So we're selling less homes than we were this time last year. Now, if you think about it, inventory is going up, but the number of homes selling is going down. Basic economics would tell us that, hey, demand's not as high for homes, and that what would follow is prices should come down. But let's dive into the average sales price data. As you see here, the average sales price is up 5.5% in the detached sector. Our average sales price is 1.4 million and some change. On the attached side, believe it or not, attached, again, condos, townhomes, apartments, the average sales price is 820,000 and some change. That's up almost 3% year over year. So here we see values continuing to grow despite inventory growing as well. So what is this telling us? It's telling us that the demand for homes has not been outpaced by the amount of inventory yet. Now, if you look over the last 12 months in the detached sector, we have nothing but year over year growth for every month over the last 12 months. And on the attached sector, it's kind of a hit or miss. Most months it is positive where you have a couple of negative months sprinkled in there. I can totally see where this is showing up. I can't tell you the number of buyers that come my way that even as like, especially first-time buyers, like back in the day when I got into the business in 2004, first-time buyers always went into townhomes and condos. But interestingly, the overwhelming majority of the first-time buyers that I'm working with are all going into detached homes, and they're paying more to get into that detached market. And one of the main reasons is they don't want to deal with HOA, and they can't justify paying the HOA dues. Some of these HOA bills are $500, $600, $800 a month, and they're like, some of them don't even like actually come with amenities. It's like, oh, here's a workout room, which is a joke. Here's a 2-lane pool, which is a joke, and we do ground maintenance. And somehow that justifies a $600 to $800 monthly HOA fee. Maybe they cover the trash bill, but still, it's ridiculous. So it's becoming increasingly hard for buyers to want to deal with that cost because it affects their DTI ratio, and to also deal with the fact that they're in an HOA. There's rules and regulations that doesn't allow them to do a lot of things. A lot of attached properties don't come with in-unit washer dryers, or they're limited on parking in most cases. They're saying the heck with that. They're going straight into the detached sector. They're coming in at higher prices and just getting into homes that they're probably gonna stay in a lot longer, if not forever. The next metric is days on market. And this is a big precursor that a lot of people follow. As days on market get higher, they they instantly forecast that the market's gonna crash. You know, San Diego is used to like really, really low market time. So being the fact that we're in this average days on market in the 30s, we've definitely acclimated to it over the last couple years since rates have gone up, but it is kind of foreign territory for San Diego County if you think in the grand scheme of things since the early 2000s. Year over year, our average days on market is up 10% in the detached sector, it's 33 days, and it's 39 days in the attached sector. And it's a 30% increase year over year. But if you look month over month, our actual days on market is declining in both sectors. So you can see in January, it was 44, then 36, now 33 in the month of March. And on the attached sector, it was 46, then 41 in February, and then 39 in March. Whenever I'm looking at data, I usually look for 3 to 4 months to establish or essentially suggest that there's a trend. So it'll be really interesting to see how the numbers for days on market pans out for the month of April. Because if you look back to April of 2024, from April 2024 all the way till December, the days on market continued to grow with a couple of months where it stayed stagnant. But bottom line, from April to December, the average days on market increased. All right, now probably one of the most important metrics to look at, the inventory of homes for sale. So new listings are homes that are like new coming to market. So we're counting the number of new homes that are coming to market. And then the inventory of market is the new listings plus any standing inventory from February that just transferred right over into March. The entire county of San Diego, we had 2,804 detached homes on the market. As for attached, we had 2,082. So in total, guys, we're talking about less than 5,000 homes on the market for the entire San Diego. So when you're seeing all these headlines about how inventory is going through the roof, and last week, talking about national trends, last week we talked about how national inventory is going to very, very likely reach 2019 levels. But here's really, really important data to be mindful of. An overwhelming majority of that new inventory that's coming to market, that's got us on trend to break 800,000 homes and reach that level of 2019. A lot of that inventory is in Texas and Florida. 2 states are making up an overwhelming majority of the new listing inventory coming to market for the entire nation. San Diego is not one of those cities that's making a major contribution like that. You can see here our inventory back in 2019 in the detached sector was around 10,000, and shoot, we're not even near half of that. On the attached side, attached inventory back then was around 3,000-ish homes, and we're kind of approaching that number. So if you're shopping, say you're a first-time buyer, or maybe you're downsizing, or maybe you're looking for an investment property, you're probably gonna have way more options available for you in the attached sector, townhomes, condos, apartments, right? In that scenario, you may have a little bit more negotiating power. Maybe you can negotiate something better on the price. Maybe you can negotiate some credit, like closing cost credits or some repairs or rate buy downs, what have you. On the detached side, that can happen. It's not gonna be the majority of the time though. Our inventory in the detached sector is still just way, way far off from 2019 levels. And the demand in that section is just still too high. Now for a quick total market overview. So this is just gonna be attached and detached combined together. We had 3,214 new listings come to market in the month of March. We had 2,172 homes go into escrow. That means they accepted an offer and they're going through the escrow process. Both of these are positive. So we have new listings, 12.7% more new listings than this time last year, and about 2% growth in pending sales. Now our number of closed sales is down kind of significantly, 8.4%, which as I mentioned at the very, very beginning of this video. The median sales price, which I hate to reference, especially when it's just countywide, but regardless, it's up 3.2%, and the average sales price for the county is up 5.4%. The average days on market for the county between both sectors is coming out at 36 days, up 20%. So you figure 20% on 30 is 6. So our average market time is up 6 days. That's not significant. And check this metric out. So I mentioned earlier, we're sub 5,000. Here it is exactly, 4,886 homes, up 42.6% from this time last year, but less than 5,000 homes in the entire county. This is why it's so challenging. If you are going to enter the market and you have very, very specific guidelines, I'll give you a perfect example of this. I had a client, we just closed escrow this week. They were looking for a detached home in Del Cerro, and they were in between 1.3, 1.7. They wanted 4 bedrooms. Ideally, they wanted not like 2 baths minimum, but they wanted 3. We didn't have very many homes to look at. Okay, there's maybe 6 or 7 at a time, but of the 6 or 7, half of them were garbage. They weren't even worth looking at, which really left my clients only 2 to 3 to pick from. So if you're looking to buy in this market, it really behooves you to expand your search. Make sure you bleed into the surrounding zip codes if possible. If not, if there's a specific zip code you want to be in, or a specific neighborhood you want to be in, or a specific school district you want to be in, be prepared to not have very many options to pick from. Be prepared to wait a little bit longer for maybe the right home to come to market. And be prepared that when you find that right home, if it's nice and it looks great and it checks off all the boxes, that home isn't just checking off the boxes, isn't just nice, isn't just perfect for only you. It's probably perfect for 5 to 10 other families as well, or individuals. And that's it for the San Diego data. Now, if we correlate this, if we connect this with the national trending data, as I mentioned earlier, we're on track to break 800,000 homes, which we haven't seen since 2019. But as I mentioned, a lot of that inventory is coming from 2 states, Texas and Florida. San Diego is showing similar trends. We're getting inventory growth, but we are a ways off from pre-pandemic levels of inventory, with the exception of the attached sector, which I mentioned. Looks like there might be a lot of opportunity there. If you're looking to either get into the market as a buyer, you'll get a little bit more negotiating power, and then you'll also have more options, which is kind of the biggest challenge for a lot of buyers right now. They just don't have a lot of options. All right, and that's it for this video. If you have any thoughts, questions, or concerns, don't hesitate to reach out. As always, I'm Karl Kyler, your San Diego realtor. I'll see you next video.